This video blog is going to be discussing the company liquidation option of a creditor's voluntary liquidation. Richard Sims, who is one of the licensed insolvency practitioners at FA Sims & Partners, is going to help explain the process, benefits and costs of this liquidation option. Hi Richard.
Hello Martha. Hello everyone.
So can you start by just giving us an overview of a creditor's voluntary liquidation? What is it? Who's it for? That sort of thing, please.
I understand. Okay, so this is just a short video, so we're not going to spend a huge amount of time on different points. So just to give you an overview of the situation, as Martha suggests there. So creditors' voluntary liquidation. Creditors are the people who benefit from the liquidation. They'll receive the dividend from the liquidation process. Voluntary means that the directors themselves start the liquidation process rather than being forced into liquidation by a creditor. And the liquidation refers to the conversion of the assets of the company, so maybe book debts, stock, goodwill, whatever it might be, into cash, which is then available to be divided amongst the creditors within that. So creditors voluntary liquidation available for limited companies, so registered companies house, and for limited liability partnerships as well, LLPs, not your old style partnership, but LLP. Okay.
Okay, brilliant. And can you give the viewers an overview of the process of a creditor's voluntary liquidation?
Perfect. So again, we need to remember the voluntary liquidation, the creditor's voluntary liquidation is one of several options for a business. So we'd always want to cover off all the options for the business if we can do in the first place. But if the CVL, the creditor's voluntary liquidation, is the way to go, then what we suggest is that the process is that the directors will have a meeting with themselves. Ultimately, we'll provide a minute of that meeting to record that decision. The decision taken at that directors' meeting will be the company cannot carry on because of its insolvency. On the back of that directors' meeting, 2 further meetings are called. Again, we will call these meetings for you. We'll prepare all the paperwork for you. It's a meeting of the shareholders, so a members' meeting, and a meeting of the creditors, so a creditors' meeting. At those meetings, shareholders can attend by paper or themselves, and the same with the creditors' meeting, creditors can attend or not. One thing to note, creditors' voluntary liquidation, director or a director needs to be at that creditors' meeting. Okay. Thanks.
Okay, brilliant. And what are some of the benefits for a company director thinking about this process for their insolvent company?
Okay, so it's never what people want to do. I think we recognise that. No one wants to be insolvent. No one wants to have to close the company down. However, if they need to get to a point where the CVL, the creditors' voluntary liquidation, is the right thing to do, the benefits are really to hand that problem company away from the directors and give it to us to deal with. So we will deal with the creditor pressure then. We will deal with the distribution of the assets, we'll deal with security of the assets, we'll deal with the sale of the assets, we'll look after all those aspects of the company. We'll look for a bit of help from the directors in the first place in terms of providing us with some financial information, some paperwork, etc., books and records, asset lists, that type of thing. But basically it's an uplifting of the problem to ourselves. One thing that should always be borne in mind with the CVL is it doesn't necessarily mean that it's the end of the road for the business that lived within the company. If you imagine the company is a cardboard box, inside the cardboard box there's some good bits and some bad bits, and it is possible in a voluntary liquidation, a creditor's voluntary liquidation, those assets can be sold across to a third party. That third party could well be an existing director, existing shareholder, totally unconnected party, depending on what the nature of the business is and whether those assets are divisible in such a way to a third party, interested party. But we can sell those things on, and it can mean that the business can live from old company to new company and survive, and provided it's done correctly, there's nothing illegal in doing that, but it must be done very carefully and correctly to achieve that. So, how's that?
Okay.
Hey Martha?
FA Sims, you've gone over a few things of how you can help the directors throughout a creditor's voluntary liquidation with the paperwork, etc. But what else are you there for? And also, can you possibly explain some of the costs it might be? Okay.
So, first of all, we recognise the industry we work in is not a very well, what's the word I'm looking for, understood industry. So it's, in the first place, our role is to explain to directors the terminology, the processes, and help them understand what's involved. We take the view that we don't like surprises, nor do you. Therefore, our attempt is to try and make sure that you understand what's going to happen from A to Z of the process, We'd want to discuss at the early stages any particular issues that we think might come out that we need to be talking about at an early stage. We'll always discuss with you the risk of disqualification with the director, so we'll always be very upfront and open with you from that point of view. I think the key thing from our side, we are licensed, so we will give you correct advice. We are regulated. If we give you bad advice, we'll be in trouble, basically. We're also a long-established firm. We've been running now 36th year. We're running this year, and therefore we do want to make sure our reputation is right. We work with a lot of professional and trade bodies and established businesses and organisations to make sure our reputation advice is correct. What our biggest concern is that you end up as a company director being advised by someone who is not licensed and who is telling you they can do things that we can't do. Because what they're saying by its very nature is they're telling you they can do something we can't do. What they're advising you to do by its interpretation must be illegal. And every company that goes into liquidation will be investigated by any liquidator. And so if you're giving advice to do something illegal, you're putting yourself in a problem. Please don't do that.
Okay, thanks, Richard. Well, that was a basic overview of the Creditors Voluntary Liquidation. And if you have any further questions regarding this process, then please contact Richard or one of the other licensed insolvency practitioners at FA Sims on the number at the bottom of your screen. Thank you.
Thank you, Martha. Thank you.